Have you seen the news about the rising interest rates? How's that going to impact you? Stick around, you'll find out. Hello everybody, my name is Barry Horvath and this is Moving Forward TV with your local market update.
And I am DeLynn Gaston. Thank you so much for joining us. So the news, it's been on the news, although, we kind of find out ahead of time because we watch the markets really closely, but mortgage interest rates are on the rise. The Federal Reserve they've all met and they've determined that the interest rates need to go up. Why is that, Barry?
I give up. Why is that, DeLynn? We should watch the news more, huh? I'm just kidding. We've been talking about it for some time. All last year, the last quarter, we've been talking about rising interest rates, how it's going to impact you. What the heck is going on? Now, all of a sudden, the media puts it out there and people are listening. Yes, rates are on the rise. And you know what's so funny, though? The Fed fund rate really has little or nothing to do with mortgage interest rates. And I don't know how many times we have to tell people that, but they don't really understand that and how it works.
Right.
But it's reality right now. So welcome to our reality show. We're gonna touch on how it's going to impact you, what is it going to do to the buying power, and why is it happening? So, DeLynn, I know people are calling you now and they're saying,
why is your rate so high?
Why is your rate so high?
Why is your rate so high?
Well, everyone's rates are so high.
The thing is in our world, that's been going on for a little bit now, because again, it starts happening and then probably about a week later the news catches up with it, right? Yeah. So that's what's been happening. So interest rates have been on the rise. The FOMC, Federal Open Markets Committee met, FOMC, Federal Open Markets, and in any event, the bottom line is the mortgage interest rates are going up. A lot of this is reactionary to inflation. So it has a lot to do with the inflation and what is going on. Now you can tell that, like we were talking earlier this morning, Barry, right, at the gas pumps.
Yes. So
at the grocery store, right?
Let's face it, you all are experiencing the squeeze of the effects of inflation. Price of gas is higher. Price of going out, just going to lunch now is higher.
Yeah, you're right.
I mean,
even just like McDonald's and stuff like that, everybody has gone up.
$10 for a Happy Meal now, right?
Right.
I mean,
what happened to their dollar menu? Remember they used to have something called the dollar menu?
Now it's a $3 menu, I think. Yeah. I really don't know.
It used to be right there at the drive-thru. They had, that little poster board's gone.
Yeah, they ripped it out. The price of groceries going up. I mean, just everything across the board. So our government has to act upon this to control it. And the effect is, if you don't slow down the spending, because when you give cheap money, people spend more. When you take away the cheap money, people spend less. So less people spend, it's a balancing act, right?
Right.
And if you don't control it, it's going to get out of hand. Like it's going to be what we call unaffordable. We already saw a 17% increase in real estate prices last year. We're expecting another 7 to 8% increase this year, which is normal. So we got to do something to taper it. So you know what? I had somebody call me the other day, and they said, "Hey, I want you to look at this. My current lender sent me this estimate. I'm going to refinance my house, and it's going to be 2.875." I said, "Wow, when did you get that?" He goes, "I just got it." I said, "So how many points are you paying?" He goes, "Points? What do you mean points?" I said, "Well, points are the charge they add on to get you that rate." So, sorry, I've got to check my tweets. These new Apple Watches, I don't know how to turn it off yet, so I apologize for that. We're being real. But, and it was costing him like 3.5 points to get that rate. He says, so what does that mean in layman's terms? I said, well, it means on a $200,000 loan, you're spending well over $7,000 to buy that rate down.
Plus the rest of your closing costs.
Plus the normal closing costs. So we did the math, and it was going to be like 128 months to break even by the time he paid those points and closing costs to where it would make sense to do the refinance. Now, that's fine if you're going to stay in your house for 10 years, but if you're not, at what point doesn't it make sense? And sometimes it does make sense to pay the points and get the rates down. If you're consolidating high interest debt and for sure you're going to stay in your house, but you know that what's the average loan? Is it
5 to 7 years?
It's 5 to 7 years. So, in my mind, it doesn't make sense to refinance unless you're in that 5 to 7 year recoup break-even point.
Right.
But anyway.
So not only that, those advertisements that you get in the mail, I'll tell you right now, a lot of times in that fine print down at the bottom, those rates were determined it had to go to the printer and everything. So, weeks earlier,
right.
because, and it'll say it. And interest rates, so that you guys all know and understand, interest rates change on a daily basis. It's not like the old days. I can remember I worked in a bank back in the 80s, and literally you walked in on the banking floor.
You worked in a bank in the 80s?
I worked in a bank in the 80s, and you walk in on the banking floor to go and cash your paycheck or whatever to the tellers or whatever, and there's this little sign sitting right there and say, today's mortgage interest rate is, and that was it. And it wasn't one interest rate that everybody got, and that rate stayed there probably for weeks. It never changed.
Don't you love it when you get a message from your realtor and he says, "Can you send me a rate sheet?"
Oh, geez. Hopefully, most of the realtors don't do that anymore.
What's a rate sheet?
They're definitely a lot wiser than that these days.
And what affects the rates? And we obviously down payment, property zip code,
right,
credit score, property type. Is it a condo? Is it a single family home? Is it a manufactured home?
I always tell people there's 5 things that are going to affect what your rate is. Not everyone gets the same interest rate, and they'd say right away, I have a 780 credit score. Okay, that's one of the 5 things.
Yep. Yeah, and are you getting cash out? Are you just doing a rate in terms?
Right. So there's a number of factors that go into it. Now, what determines just in general all of those interest rates? That has to do with mortgage-backed securities.
Sure, mortgage-backed securities right now. In March, so just so you all understand, the Fed has been, for some time now, pumping money into the markets, okay? Mortgage interest rates are determined by the bond market. When bond rates go up, interest rates tend to go down. They act in opposite cycles. So when you have the government putting money into the bond market, it's going to sustain it and make those bond rates go up. Well, they're going to stop doing that next month. So what does that do? Well, it deflates that pressure. Bonds will drop. Well, ultimately, interest rates are going to act in the opposite direction. It's their way of controlling this inflation that we're in right now. I mean, let's face it, you can't keep going like we are. It feels good, like, oh, I'm making more money at work. I got a pay raise, but really, are you even keeping up with inflation right now?
Right.
So, and it really impacts your buying power, ultimately. Yeah. So, when these interest rates go up, it really does change a lot of things. And it's not just going to happen on mortgage rates, it's going to happen on your car interest rates, because right now you can't even buy a car right now. There's like waiting lists.
I know.
Somebody told me that a Range Rover, it was like a 3-year waiting list.
3 years?
That's what somebody told me. I don't know if that's true, but
it's funny you say that, because I can remember back in the 80s again, when I worked at that bank, I was on a waiting list for a car.
Right.
So again, and where were rates back in the 80s? Double digits.
Right.
In the 80s, mortgage interest rates were 18%. Cars people were on waiting lists for cars. I'm not saying mortgage interest rates are going to go up to 18%. God help us. I really hope as a country we're a lot smarter than that now. So that's what I'm going with anyway.
Yeah.
But yeah, I know you can't get cars. So the world in general, the economy, we're on a shift, people. We're on a shift. We've been saying, buy now, buy now, buy now. We were blessed to have Connie on the show last week, Connie Luco, and we were all talking about how the market is crazy and this is not a bubble and buy now. This is some of the stuff that's going to come out now because now the mortgage rates are going up. We've known it. We've known it for over a year.
Right. So I know we have some examples here. We want to show you how much the interest rate changes impact your buying power on just a normal purchase. Because remember, when you purchase a home, your interest rate determines your payment. We all know that. But it also determines when we qualify you, we add up all of your debts, which means we're going to take your income, we're going to deduct, we're going to give you a maximum payment amount based on that gross income, not your net, gross income, whether it be Social Security, disability, or your regular job income or self-employment income. Those all count into that. And then we're going to back out all of your current debts. If you have car payments, credit cards, student loans, or anything you co-sign for that maybe you cannot prove or have a payment history paid by that other person for 12 months or more. There are exclusions too. So this is just an example. If you think about it, just a few short weeks ago, a good interest rate would be at
in the threes, right.
3.25, even sometimes in 2s where people bought down the rate. So if you made $5,000 per month and you had a car payment at $375, student loan $75, credit card monthly minimum payments of $150, your total debts were $600 a month. And then if we had taxes on this new house we're going to buy of hypothetically $1,800 a year, and then we have to factor in your insurance costs on the new purchase, because it is required to have insurance on any property you buy, because the lender...
Which you would want anyway.
Yeah, the lender wants to be protected, and of course you should be if there's fire, theft, hurricane, disaster, anything like that. Your maximum qualifying based on that, your max payment would be $1,650 a month. On $1,650 a month, that got you a house of $315,000. That was
That's the example on the left. That's the one where 3.25%.
Yes.
Probably just right around Christmas.
Yeah,
a month ago.
if that. So in today's world, and I know if you want to give the example at the current rate, what the difference is.
Roughly
same scenario.
Everything is identical. You can see them side by side. The difference is the interest rates now, they're on their way up. So we just used 4.25. And again, depends on 5 different factors what it's going to be. But this is just as an example what 1% increase in interest rates does to your qualifying. Everything staying the same. You can go down to the bottom 2 lines there on the right side, and your maximum payment now that you qualify for, same income, same debts, is $1,828, which gives you a max loan amount of $280,000. That's it.
So you basically lost, just in the last few weeks, $35,000 of buying power.
Yes.
So
that hurts. That's big in this market when houses have all gone up and they're continuing to go up and people are bidding over asking price and such.
Right. Which, there's good news in that too, because with it being a seller's market, I know we have a lot of pre-qualified people right now and they're getting frustrated. They put offer after offer in and they're not getting the house, especially people with the low down payment assistance, or VA buyers in particular.
FHA buyers. I really feel bad for them. It's like an entire demographic. And I don't want to go off on a tangent here, but maybe I'll go off on a tangent here.
Go ahead.
To listing agents out there, please stop telling people that FHA and VA are bad loans. They're not. They're not. Sometimes it's the best loan for the person. Please let your loan originator determine what the best loan is for the person.
You know what? The VA
For the
loan, in my
client.
mind, is
the best loan
it's
out
the best
there.
loan out there. You got a government insured lower rate than a conventional.
Yes.
There's no monthly PMI, and the borrower can walk in with no money. I mean, no offense, but putting more money down doesn't make a borrower a better borrower.
No, it doesn't.
Necessarily, you know. And I know our veterans, they are entitled to that benefit. So, you know,
It's like a whole demographic of people that are being left out, sadly,
Well-
right now, out of the housing market.
Yeah, and it's actually sad. So ultimately, investors, which are typically cash buyers, quick close, are upbidding these houses. They're getting the houses. So with the investors buying the houses, what do you think is going to happen? Well, you're going to have more rental properties. But because they know rents are going through the roof right now. I mean, look at your rental income.
Right,
You
and I
know,
was just going to say that.
The
So
cost
now-
to rent a home is crazy.
Is outrageous, exactly.
But
And even an apartment, not even a house.
Yes.
Let's say they're just renting an apartment. Even apartments are going for anywhere between $1,200 and $1,800 a month, and that's for a 1 or a 2 bedroom apartment. You know, these same things a couple of years ago, or even a year and a half ago, pre-COVID. You know, because I
Yes.
think a lot of this stuff, you know, unfortunately came with COVID. So
COVID made everything happen.
COVID, it's
or not
COVID's
happen.
fault.
That's it.
But you know, before that, these apartments were going for $600 to $800 a month, and now they're going for $1,200 to $1,800 a month, which is
Yeah, you
absurdity.
can't.
Just absurd. How do people do that? How do you do that?
The median and people get caught in that rat race where they can't move.
Right.
They can't find a house quick enough. They have to re-sign a lease. The landlords are raising rents because they know that people are trapped. They have nowhere to go. And it's just a vicious cycle.
So another sidebar tangent. Landlords, please stop.
Well,
Please.
I have to tell you, in the landlord's defense, because I'm a landlord, the costs of the landlord to maintain a rental property is also going up, because when he needs to replace the AC, you know, an AC unit just a couple years ago that was $3,500 is now $5,500
Right.
for that same unit, and it's going to go bad. The hot water heaters are going up. The price of appliances, oh my goodness. I
So
mean,
what does all of that spin back to? Inflation.
yes, it's all back in inflation. So the landlords have to raise their rent in order to maintain the home. So I get it. It's a vicious cycle. Now, let's talk about something good, though.
What? What?
You know what? What? You know what? And I know if people are buying or choosing to rent, you can get a lot of house for the same money as rent. So let's show them that same example now, what you can get for $2,000 a month rent. How
Which
much
is
house?
not unusual for a house.
Even
rent
at
right now.
You know, even at a higher interest rate, like even 4.25%, which some of you are going, oh, that's terrible. I mean, we don't know what your rate's going to be. It could be more, it could be less, but that's a typical realistic interest rate right
Absolutely.
now for a buyer. And you know, some of you say, oh, you guys are expensive, whatever. That's not our rate. We're just throwing out examples here. We're not quoting anything, but we want you to understand, if you're paying $2,000 right now in month for rent, if you calculate in $200 a month for taxes, which is $2,400 a year, insurance at $1,500 a year, which is $125 a month, at a 4.25% interest rates, even at higher interest rates, you can still buy a house, well, and this is just your loan amount, for $340,000.
Right.
That does not include whatever money you're putting down. And, you know, you can get in.
So if you got $50,000, let's say, to put down, you're looking at almost a $400,000 house.
And even if you don't
Those
have
you can buy.
$50,000,
Right.
FHA loan limits have gone up. We told you about that in the past. You know, $340,000 still gets you an FHA home,
Yes.
which is 3.5% down. What is that? $12,000 on
There you
340?
go. So now you're
somewhere
looking
around
at
there.
a house around $355,000, let's just say, for round numbers.
For $2,000, you can own and lock in a 30-year fixed rate mortgage that's not going to go up. Rents are going to continue to go up. Now, you can also paint the walls any color you want. You can move around the walls in the house. You can landscape the outside to your heart's content. You can enjoy cheaper car insurance because you own the home. There's so many benefits to
home
owning.
ownership. Not to mention you can still deduct your mortgage interest.
Hopefully.
On your tax
Not everybody
returns.
can, but some people can.
Some people can.
If you're not, if you're able to itemize, yes, mortgage interest may still be deductible. So, when you think about that, that's really exciting for people. You can get in a VA, they can get in for no money down.
Right.
FHA, 3.5% down. Conventional does have a 3% down program, although, that's kind of a walk on water loan, as we call it.
Income limited there.
Yes, but 5% down on a regular conventional. So again, on 340,000, that's
It's funny
17
how many
grand
people
down.
still think that on a conventional loan you need 20% down.
And you
I was
don't.
surprised that somebody just mentioned that to me the other day. Oh, I can't go conventional because I don't have 20% down. You don't need 20% down.
And where can you get that money? It can be a gift from a relative. It can't be from your mattress. It cannot be from your closet or your safe. It cannot be cash. It can even be a loan from your 401k. And when we debt ratio you, your 401k, we don't even count that as a debt. So you can borrow from yourself, put it down on a down payment, those of you smart enough to save in your 401ks, and lock in on a 30-year fixed rate.
So one of the things that I did want to say as well, people sometimes are thinking that this is just a bubble, that they're not going to buy now, they're going to wait for the markets to come down. Well, we were talking to some people a couple of weeks ago at our annual convention in the company, and somebody really, I thought that this pretty much put it in really good terms. When someone said to them, is it a good time to buy a house? Her answer was, I don't know, is it a good time to open up a savings account?
Yeah.
Right?
Yeah, there's really not a bad time.
Right? So if all you're doing is you're taking your money from your savings account and you're moving it into your real estate account. And real estate will continue to appreciate. This is not a bubble. It is a complete supply and demand. And if you watch any of our past episodes over the last few weeks, you will see why it is not a bubble. We talked a lot about how, it's a supply and demand thing, and the demand is not going to decrease. We have a lot of people who are coming into the market to buy homes. A lot of people, you all know, moving down from up north to buy homes here in Florida. The demand is not going away.
No, and when we have beautiful weather like we have today,
I know.
hello, why wouldn't you want to live here? Think about, up north, how cold they got hammered in this last week. And
that
we,
brings up
and
a
we
good
got
point.
to freeze.
What happens every spring down here in Florida? Everybody's tired of the snow,
Yes.
so they start looking to buy houses down in Florida. So if you live here, work here, play here, and all of that, now is the time to really seriously consider buying a house.
And it's not just our market. It's the Southeast, it's
Right.
Texas,
Right.
it's Tennessee, it's Georgia, it's South Carolina. There are a lot of states. There's just growth in general, population growth, and again, buildings can't keep up with supply and demand again. All part
Not
of
a bubble.
No, it's not.
Buy
It's
now. Buy now.
It's not a bubble at all. So, going forward, if people, and I know we put people in our Quick Qual
Yes.
app, which is an amazing app to get offers in. And I tell people right now, get your offer in. You never know, because what was the number last month? How many people bought houses last month? You had the number in Florida.
27,000 or something like that.
So people are getting houses. So I encourage you, if you are looking, you're shopping, and you're getting into the bidding wars, don't give up, because people are buying real estate and they are getting loans to buy the real estate. You just got to be at the right place at the right time. You never know. But if you don't put your offer in, you can't be in the game, and you can't start your savings account.
And I would say, patience
Yes.
Patience. Please have patience with this. Don't get discouraged, like Barry said. Don't get discouraged. Just have patience. Don't be so anxious to just put offers in on something that you don't want. Just take your time, have patience, continue to look, and the right house will come up.
And be realistic.
Yeah, be very
Be realistic. Give yourself plenty of time. Don't go in with a low ball offer because you're not going to get it. In fact, most houses are going, I forgot the percentages, are going above list price. So
a lot of them are still going above list price. Not necessarily all of them, but some of them still are. And if you do have down payment assistance needs, that kind of thing, again, definitely be a little bit more patient because those are, unfortunately, the sellers are not accepting things like that. So continue saving, continue making your payments, continue doing all of the things that you would normally do.
We want to help you.
Yeah, that's what it's about.
Yeah, we want to help you achieve that dream. All right, so lots of information this week. Let's talk about WPBA real quick.
Yes.
Because we have a whole new program rolling out. And, we love to talk about our favorite local community charity, West Pasco Business Association. If you don't know about it, you should, because right now we actually are helping homeowners that are struggling from all this COVID stuff we've been talking about with rent. And so right now, if you are a Pasco County resident and you're struggling to pay rent, utilities, go on our website. It's wpba.biz, wpba.biz. Just click on the tab that says the HEART program, and we'll
Little
try
short application that you fill out.
Yep, and we'll try to get you some assistance there. We're all about reaching back
And just because you've done it before, some people think, oh, I did this, the last program, I can't do it this time. Don't worry about it. Go on and see anyway.
Yep, there's more funding coming in right now, so
it has some limitations, but let us determine the limitations, not you.
So reach out. Hopefully we can help you. If you know anybody, we appreciate you letting them know best.
Landlords.
Yes. Speaking
Our
of
real
landlords,
estate partners out there.
You guys know a lot of
there's some
them.
landlords out there that are hurting to make their mortgage payments or whatever because their tenant can't make their rent payments.
Yes.
This is a way to catch everybody up.
My takeaway this week, $2,000 still gets me a pretty darn nice house. Remember that. Stop paying rent. Share our show. Remember, we're on all the social media platforms. Forward this out however you found us. Like it.
Like it, share it. What do you do with all of those other ones? I don't know.
Click it.
Click it. He's the social media person. We are today and every day.
Moving forward.
We'll see everybody next week.
Have a great week.
Bye-bye.